we have a behemoth in the making by the joining of two behemoths in the financial space. And to talk about it with me is my colleague Ira and Deven Choksey. Needs no introduction really, but Ira, I'll first come to you. This is, well, in a manner of speaking, something that has always been spoken about, or what if something like this would happen, but it's just come out of the blue, the merger of HDFC and HDFC Bank.
Absolutely, Neeraj. Let me first give you, the basic news, and then I'll add in some perspective before going to Deven sir for more. Early morning announcement coming in of a merger of HDFC Limited with HDFC Bank. It's going to be a two-step merger. There are two smaller corporations which are first going to get merged into HDFC Limited. Those are not material in size, but once that is done, there is going to be a merger of HDFC Limited into HDFC Bank. Obviously, HDFC Bank is the larger entity here. The swap ratio that has been determined is that for every 25 shares of HDFC with face value of 2, investors will get 42 shares of HDFC Bank with face value 1. Now, that is as much of the headline news we have right now. More details will follow. There's an analyst call starting shortly. But Neeraj, as you said, as far as I can remember, covering the banking sector, which is longer than I'd like to admit, we used to ask the question to the HDFC and HDFC Bank management, so when are you merging? And they would just laugh it off, and then eventually we all got tired, stopped asking the question, and now they've gone ahead and done this merger. Look, I think logically, because the guidelines for NBFCs and HFCs were slowly getting harmonized towards banks, this is actually a step which makes sense. This is tied to what has been changing on the regulatory side for sure. So HDFC merging into HDFC Bank at a time when regulations are fairly cohesive, not in terms of regulatory the ratios or the money that you have to set aside as SLR and CRR, that still of course differs, but broadly in terms of prudential regulations, etc., they're getting harmonized. So that from that perspective, this move and the timing of this move certainly makes sense. You add up the assets, you get a behemoth, second only to HDFC, to SBI, but of course still behind them, about 25 lakh crore is the size. They combine the might, the housing finance might of HDFC Limited with the retail financing, might of HDFC Bank Limited, which is also now reasonably aggressive in wholesale banking. So I think, they become in many ways untouchable. HDFC Bank, a lot of people believe was already untouchable, but brought together, they are fairly untouchable in that sense. There will be issues. You have to set aside capital. You'll have to figure out your CRRs, your SLRs, and all of those requirements, and that will require money. And we'll find out exactly what those provisions will look like. But that's the big takeaway at this point in time, Neeraj. And I'll let you go to Deven sir from here on.
Yeah, thanks, Ira, for that. And it'll be interesting to see what the combined market capitalization of this happens. Are we looking at something coming within sniffing distance of the largest market cap entity as well? So that's the other piece from market's perspective. But Deven is here. Deven, good morning. What do you make of this announcement out of the blue?
Well, Neeraj, good morning. My understanding has always been that I think big is getting bigger in this entire universe. And this is where I think the confirmation of this particular understanding. Today, these two big companies are coming together. There will be different operational synergies, and I'm sure I think this is going to be spelled out by the management in detail in the following conference call that is going to come up. But my point of view here is that I think the larger book size is basically, I think, making the difference. You already have around 19.6 crore AUM of HDFC Bank and around 6.5 lakh crore AUM of HDFC Limited. I think put together, you are talking about 25, 26 lakh crore worth of AUM with a combined revenue book of both these companies put together anywhere in the vicinity of around 2.5. So I would think that I think we are likely to see a very large organization emerging. And why this large organization is required, in my understanding, I think we are entering into an era where digital is going to drive the businesses. And if you are operating a separate companies, which are basically, I think, required to be integrated at a distribution level, vis-a-vis, I think, at the product level, in my understanding, I think this is where probably the drive has come suddenly, if I may want to use this word, that this bank is now talking about integrating different products to the end customer. Because we have seen few days back, I think retail assets acquired by the Axis of Citi, and I think they are talking about growing the size to a larger level. here is a customer, I think, who is required to be completely integrated in a digital era. And if you have different entities through which I think you do that, probably I think you are going to have a lot of inefficiencies. This is where I think this bank is probably showing a new path. We'll have to wait and see and think of the management on this particular front. But I understand that I think it is a size which is going to become much larger than what we have seen till now.
Yeah, then one is size, one is what it means for shareholders as well. Now, unless there was a swap ratio, because there is one that has been given, one would have thought that at some point of time the holding company discounts would narrowing would come into play, etc. Net from a shareholder perspective, and then I'll get into the other details. From a shareholder perspective, now you back it down to the swap ratios, right? That's the simple math. Don't try and complicate it.
So I think I would put it this way, Neeraj, that once you have 41% holding in HDFC Bank at HDFC level, the parent level, quite good possibility following 10 years that you are going to see a systematic monetization of this particular holding. And the group at group level, I think the holding would probably, I think, start coming down and maybe also following the RBI guidelines. So if that is so, then I think you're talking about 10-15% kind of a monetization happening for whatever period of time hereafter. I think it's going to be a bigger bonus, if I may want to use that word as, I think, for the shareholders of a combined entity. So whatever the ratios, whatever the implications coming out, but my take is that I think up till now that particular possibility was little less, which is now likely to grow much bigger of monetization of equity stake, I think, which probably the combined entity would start offloading at some point of time. And this is where I see, I think, a bigger amount of reward coming into the shareholders of the HDFC.
Yeah, David, that was the other question. So one is the trading angle that people may have. The other is the investing angle. Now, we know that for the last 2-3 years, because of those digital issues, etc., HDFC Bank has been under a bit of a cloud. I mean, the stock price performance and even the business performance hasn't quite done well on the back of a stupendous quarterly update given yesterday, when it was anyway supposed to do well. Now we have this announcement. There's the creation of a behemoth. Do you reckon this behemoth from where it is right now can actually do what an HDFC individually or an HDFC bank more so individually has done in terms of business growth as well as market capitalization growth? Because until 2 years ago, that name was synonymous with wealth creation. Can it rediscover its mojo again? Why or why not?
Just go back, I think, few years back in 90s, I think till good many 15 years almost, I think plus, HDFC Bank has clocked the growth at around 30% plus CAGR. Now, I think today, I think as you rightly brought out, I think 21% growth has happened into the AUM of HDFC Bank, which is after a many number of years, I think this particular growth has come. Maybe you can call it as that during the pandemic period, the company put down the brakes and I think didn't allow the AUM to grow because they wanted to be conservative of not, I think, bringing the non-performing assets in a certain period. Now they actually started expanding. Already the housing finance company is growing at 20% and it is promising to grow, I think, about 20% going forward as well because of the demand for the housing. Imagine a size of 25 lakh crore AUM together and imagine, I think, a 20% average growth that this company would produce. We are talking about producing 5 lakh crore worth of AUM every single year plus, I think, higher in going forward period. So in my viewpoint, I think this could in itself, I think, leverage significant amount of strength. And as I was making a point, I think the disruption is happening through digital. Today, companies are innovating products. Companies are, I think, going out to the customers to distribute loan in seconds and minutes now. I think this is where I think the larger amount of fintech companies have been operating. And if the larger companies like HDFC, they don't take the advantage of this particular situation, I'm sure many other corporate banks, private sector banks also would jump into it. If they don't take that advantage, quite possible that the fintechs could get a literally higher amount of headroom to grow. And this is where I guess I think this particular change has happened. So it will all get validated, Neeraj, but my take is that I think this kind of growth is going to be an exceptionally high growth and could possibly put HDFC Bank as well as HDFC Limited into a territory where some of the larger foreign banks would probably, I think, look at India very, very significantly and seriously hereafter, after seeing this particular size of the bank.
Yeah, that's interesting. So, I mean, and just one last thing, I was doing a bit of a back of the envelope calculation. It doesn't happen that way. but Reliance at 18 lakh crores, TCS at about 13.73 lakh crores. And these two entities individually have about 9 lakh crores and 5 lakh crores of market cap. So, I mean, the combined entity would be kissing distance of number 2, maybe eclipse number 2. Still some way away from Reliance, but yeah, a strong number 2 contender by market cap as well. One final question, Deven Choksey. So if you were a shareholder of HDFC or HDFC Bank, now you will technically be a shareholder of one, which is HDFC Bank. Would you believe that this combined might gives you the comfort of staying invested in this? Or would you believe that in some of the other larger banks or financial institutions, there are better opportunities? What's your sense? I know it's never just one thing that you bet on. I've known you kind of bet on a bunch of things, but I'm just still trying to figure out, is this the best bang for the buck, or do you believe there are other very smart opportunities available in the financial space?
So I would like to keep it relatively simple. I always put it that I think the cumulative growth, I think, is the driver of wealth creation. 20% plus kind of a CAGR growth coming into the AUM is my first trigger point as far as I think the combined group is concerned. 25 lakh crore worth of, I think, entity becoming double the size of the entity at 20% rate of growth in a 4.5 year time is my second level of, I think, expectation and temptation also in this particular thing. So suppose in less than 5 year time, if I am seeing a possibility of a combined entity growing to a size of 50 lakh crore asset book, I would then now start searching, I think, which is other bank next to it, I think, which could possibly go into the same direction, same territory. If they do so, I think certainly there is a case to consider. But at the same time, as I said, I'm not comparing one to another. I would rather like to stay invested in a portfolio of companies. Suppose if I think I like the company HDFC, combined entity, suppose I like, I think, companies like ITICI, I think with, I think, the kind of number of verticals that they are operating with, I would rather stay with selected few into my portfolio and allow this portfolio to grow. In between, there will be some opportunity in some pockets, I think, for relative appreciation into those companies. But that's more of a portfolio management practice that I think you apply. But as far as long-term investment outlook is concerned, certainly 25 lakh crore AUM becoming 50 lakh crore AUM in a span of less than 5 year time, I think is my primary motive to stay invested.
Yeah, as we speak, the markets are rewarding them. They win 9% for HDFC Bank, 12.5% for HDFC. And clearly, there's a bit of a thumbs up given to both of these on account of the announcement that is coming. As big as they come, probably one of the announcements, if not the announcement of the year 2022 from an Indian capital markets perspective. And Deven Choksey, thank you so much for joining us to talk about that very thing today.
Thank you, Neeraj.
Viewers, thanks for tuning in.